What's going on? Alex here, and today I'm answering your tax questions from Reddit. Now, this first question comes from Sarah C, and it reads as follows. I live in California, US for reference. My fiancé has been working as a freelance graphic designer for over 5 years. He's paid through avenues such as PayPal, Cash App, or personal check. His clients are usually people who are just starting businesses or need branding, so there's usually never a 1099 or the like completed. However, there have been a couple of businesses he has done work for that have distributed him a 1099, but he puts them in his junk drawer and does nothing with them. He currently landed a job with a big company as a freelancer. They pay him through personal check or PayPal, but have not officially put him on payroll. He's never filed taxes or paid taxes during the past few years as a freelancer. I'm terrified that he won't be able to get away with this for much longer, especially when he's finally put on payroll. As we are engaged to be married, I am understandably worried that when this catches up to him, it will greatly affect me also. However, he also blows me off when I bring this concern up, and any request to see a tax professional is shut down. My question is, am I being terribly paranoid, or are my fears legitimate? He has definitely made more than $400 each year, which I read is the amount when self-employed people must pay and file taxes. Any help is appreciated. Sarah, first of all, I would say that your concerns are definitely well grounded, and you do have a reason to be concerned because this will catch up to him. Now, what's going to happen is that those few 1099s that are being issued, they're going to start being flagged by the IRS because the IRS has a matching system, right? So if you have 3 1099s that were issued in your name and you don't report any of those on your tax returns, that's going to be fairly easy for them to catch, and you're going to start getting notices. Now, once those notices start coming through, the IRS is going to have even more of a reason to start looking into your fiance's situation because they're going to see a pattern of possible underreporting going on from year to year. And if this continues, it typically catches up to taxpayers. The IRS doesn't find you on day one, but eventually this can catch up to you, and it can be an even bigger problem when you guys are married because at that point, if all of this comes to light, it can be that the IRS will say, oh, that's a nice $10,000 refund you got there, bam, and apply it to those prior tax years. And of course, then you're going to have to get into the idea of injured spouse relief or innocent spouse relief, things of that nature. But the fact that you knew this was going on is not going to work in your favor. Those forms of relief that I just mentioned are for situations where you didn't know and you weren't aware. But if it comes to be the case that you were aware of all of this stuff and you do get married, then your refund may very well be in jeopardy because of that. So in this situation, the other thing to watch out for is that these other payment methods such as PayPal, Cash App, and so forth, those being electronic payment methods may result in the issuance of a 1099-K. So whether or not he's been receiving them, those may have been issued. So you have to consider both the 1099s that were filed manually by any of his customers and then 1099-Ks that he may have not received or thrown in his junk drawer. Those are going to add up and you're going to have problems moving forward. And if you think the IRS is bad, wait till California gets a hold of you because they're even more vicious in this regard. So the question then becomes, how do you address this? And I think you have to put your foot down and say that we are getting this resolved before we get married. Make that a requirement because this can create such a huge headache. I can't even tell you. I've seen tax issues blow up and literally turn people's lives upside down. I'm not trying to scare you. I'm just trying to let you know that you should get in front of this, deal with it, and not make it something that can cloud your marriage later on when this all comes to light. So the question then becomes, how do you address this? And first off, you're going to have to go back over the last 5 years and start to figure out what the tax liability is, because each of those years is going to have, let's say, $30,000 in 1099 income that wasn't reported. What would be the tax implications of that? One way to figure that out is to prepare the tax returns for the year. So once you prepare tax returns for each of those years, taking into account the income that actually was received, not the nonsense income that your fiance is going to want to report, that's going to allow you guys to establish what the total tax liability is. What if he owes $150,000 for taxes at the federal and state levels right now? We don't know. And the one way to determine that is literally to look at each one of those tax years, put the tax returns together, and then see how to deal with that liability. Because one of the avenues that you may be able to pursue is getting an installment agreement put in place, whereby you can pay the tax debts over time, and it also pauses some collection actions throughout that time so that you're not having to deal with liens and levies and things like that, which can really make things difficult. So getting an installment plan is going to allow you to space out those payments and cover all those different tax years. You can actually lump them into a single payment agreement depending on the balances, but generally you can pay them off monthly until those balances are gone and do it in a way that doesn't disrupt your life all that much. But then again, it always depends on what balances are out there. And in getting married, you guys are becoming husband and wife from a tax perspective too. And it's important to make sure that this is not a ticking time bomb waiting to go off once your nuptials are all said and done. So that's my feedback in this situation. You really should go back and assess what the tax implications are of this issue, so we know whether we're looking at a $5,000 issue, $50,000 issue, or $500,000 issue. We just don't know. And going into a situation when you're marrying somebody with an unknown amount of tax debt, that's something that can be potentially detrimental in the future. So as much as your fiance doesn't want to see a tax professional, when you're having your wages garnished, when you're dealing with levies, when you go to spend money out of your bank account, you realize that it's not able to be spent because the IRS has gotten involved, when the federal government starts seizing your state tax refunds to pay the outstanding taxes, you're going to see what kind of nightmare the taxing authorities can create for people. And it will be something to lose sleep over, and it's not going to be pleasant. So with that, definitely address this before moving forward. Don't let this be a big question mark in your relationship. Now, the way I would approach a situation if this was my client is, firstly, I would get transcripts from the IRS. Now, transcripts are essentially a breakdown of all of the information that the IRS has regarding the income that you receive. Now, where would they get that information? From all of the 1099s, W-2s, and other tax forms that have been issued in your fiance's name. So I'll start with the transcripts and see what kind of 1099s were filed for each of the tax years in question. Aside from that, I would also request bank statements, because it doesn't look like we would have all of the income accounted for on just the 1099. So I'd want to see the bank statements every year, January 1st to December 31st. I want to see all the money that came in. All right? Because if the IRS is going to show $10,000 in 1099s, but $150,000 came in, that $150,000 is going to be the number that we use to determine what the tax liability would be for that year, not the $10,000. So the IRS transcripts are going to give us an idea of the amounts that were received, but the cash statements, the bank statements, are really what are going to guide the preparation of the tax returns for each year. Once we have the income figured out, then we look at the expenses, because there are going to be deductible expenses that we can use to offset that income generally, and we want to make sure that if you have the records to substantiate the deduction and the deduction represents ordinary and necessary business expenses, certainly would want to take that as well. So even though you might start with $100,000 of cash inflows, you may have $70,000 worth of expenses in a particular year that you can use to offset that, and then you only have to worry about that $30,000 net being subject to taxes, penalties, and interest. So that would basically happen for every single tax year that's currently outstanding, would allow your fiance to get current with the tax filings and also start to figure out how to deal with the outstanding tax debts. And once you guys figure out exactly where you stand on this topic, I think, first of all, everyone's going to have a breath of fresh air, because this is going to be a huge load lifted off your shoulders. And this is going to allow you to fight about other things that couples fight about and not about taxes. Sarah, hopefully that helps. And if you enjoyed this video, feel free to leave a comment, like the video, subscribe to the channel, and be sure to hit that bell icon to be notified of future videos as soon as they're released. With that said, hopefully this was helpful. Thanks for watching.